The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. This is the Tiger Technicians Hour, 10 o'clock, well, 10:06 on the Thursday, the 23rd of February. Gosh, this month has really gone by quickly, or going by quickly. So what we're looking at here, and one of the reasons why I thought there was an opportunity just to have a trading rally, certainly in the Dow, is that we hit the 32,948 low that was made around about the January the 10th or so, exactly yesterday. The low was 32,948. And it was above the 200-period exponential moving average. And that was suggesting that there was an opportunity to a bounce. And one of the things we've been looking at for a long time, I drew in this blue horizontal line. I said that's the midpoint of the rectangle formation that I like to study. If we start to trade below it after being above it so many times, that's very important because that turns the 33,638 area into very strong resistance. And that's, 500 points, almost 500 points above where we are right now. So the aspect of consolidation that we've been talking about for quite a few weeks here, and that we're in a rectangle formation with a limited upside, but possibly at this particular point, I still think there's a chance of limited downside towards the 33,000, call it 33,000 with 32,800 area. We'll see what happens. Most importantly is the rectangle formation in the weekly chart is spiraled up in a leg B that goes to a peak B, and then within that you get an arch formation which didn't go to close to the previous high of 34,712, instead is stored in the 34,300s. That makes this a very important moment, and it's an important moment for many reasons. So if you look at the Dow, which is still holding very well concerning because it came off a low in the 28,000s back in October, screams up to the 34,000, 34,700s, and then stalls. This is a very important consolidation phase. Within the context so far, we have to consider within the context of a bull market. Now let's go to the S&P. If you look at the S&P, it's a little bit different chart formation. The rally that the Dow was holding beautifully and still holding beautifully in the weekly chart, the S&P just broke above the Chapman Wave inside track repellent zone, and now for its 1, 2, 3, 4, let's call it 5 weeks, this is the 5th week, it's holding above the 14-period moving average, holding above the green down track, inside track, what was a repellent zone, should now be a propellant zone. All of that says, it's okay, it's not great, but it's okay. If you look at the QQQ, trading up 2.14 at 296.41, the weekly chart has also very nicely broken above, and it has closed over the arch high. That was that peak D right there. I'm calling this an E for now. But that monthly chart is a lot better than the S&P in that it's attempting to move to the upside. Let me just show you here the weekly chart on the right, monthly chart on the right of the QQQ index 100, and now I'm going to give you the S&P. I just want to take a little time on this because tomorrow's Friday, it'll be Technical Friday, and there's going to be a lot to discuss. I want to see where we close today. So the S&P monthly chart has steadily hugged the 9 and 14 period moving averages, but hasn't closed decisively. It did close last month, but hasn't this month. It's been above, but we don't know if it's going to close above the, I'd say above 4,000. I really would like to see above 4,025, and right now it's at 4,013. That doesn't sound like much. You can do that in an eye blink, but that's just the way I'm looking at it. Now, this is going to be very interesting because gold has, for the past 5 sessions, touched or almost touched the 200-period moving average. The MACD is still, the histogram, the vertical lines are still expanding. Well, they're contracting a little bit, but there's a huge difference between the red 26-period exponential moving average and the 9-period differential, the green one. To get that to close above, for gold to go positive that way, I would say you have to be in the 1880 to 1880 to 1898 area. That's going to take quite a bit to do. But in terms of the weekly chart, it's the speed with which we've come down after tackling this left side, right side price time match and breaking above it and then quickly coming down, as well as the monthly chart. And that just says to me, gold is really struggling at this particular point. I wouldn't dismiss it as, forget about gold. No, I think individual gold stocks, some are starting to show a little bit of strength and some are still showing weakness. But now what's really important about the gold is if you put it together with the SI, which is silver, this is not a good looking chart at all. So silver, so you remember the whole thing is, I always look at silver as a laggard, and then all of a sudden it comes alive and it sparkles and it leads gold. Gold turns around and says, hey, what's going on? And then gold tries to catch up. And when gold finally catches up, the two of them together have run out of energy and they come down together. And that's kind of what we're looking at right here. So I think that the gold and silver right now, they're in a digestive phase after a really strong move going into the beginning of this year. And now we have to see where they settle down. If you look at high-grade copper is doing okay. It's not great right now, but it's doing okay. And it's done very nicely when you think that it was under 3.20 in the continuous contract, screamed up to the 4.30s, and right now holding steady at 4.13, down just a fraction. But it's stuck in a range. And I drew in the rectangle range. And the reason why I wanted to show you the rectangle range here is you see this cup formation within the move from that peak F top that was made back in, let me just give you the exact day, January the 18th at 4.35. That's a continuous contract. Well, have a look. Patterns repeat often. And if you look at the E-mini right here, where did it go to? Oh, there it is. So that's what you were looking at in the pattern in the 10-minute chart of the E-mini. That's what you're looking at in the pattern. Look right here, cap formation, turns around, and patterns consistently go from cup formations to arch formations like a sine wave. And what are we looking at here? What we're looking at is that, let me draw it in. It's much better to draw it in because then you can see live right there, going up to there. And now you've got the opposite. And I always love to look at these patterns over and over and over in the market. Cup, arch, cup, the sine wave pattern. And now we're going to attempt in the ESH to try to rally again. So these patterns repeat. Now let me go to the one we were looking at. And you can see there's the arch formation. Here's the cup formation. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Good morning, everyone. We're back, and we're looking at the Dow 166. The S&P's up 26. So there are a couple of things going on here. So a rectangle formation can last a lot, especially a narrow one. This is a fairly wide one, but it can still last a lot longer by being in a containment area. So that's high-grade copper. If you're looking at crude oil has constantly made these deep arch formations, tested the left side low, taken it out, and then closed above it. And once again, we've made a smaller one, but we're looking, look at all these arch formations. There's that rectangle, runs up to the top, comes back down, makes a left side, right side price time match, this bar symmetry, breaks lower, then tries again, breaks lower, tries again, and now crude oil is stuck in this lower range at 75.63. I think it's sort of trapped between 78 and 72 for the next couple of weeks. Maybe, you never know, it could be shorter than that. But most importantly, what I am looking at here is that within the context of the different sectors, if you look at the DBA, which is the DBA agriculture fund we are still long, actually for a few years now, you're looking at the commodities just rotating. Now the gold and silver, that particular area of the metals starting to weaken, have been weakening. But you're looking at the crude oil constantly weakening. But you're looking at the grains, and if you look at wheat, wheat has gone to a peak, second peak D in the cup formation, beautiful symmetry. Look at that left side, right side price time match, goes to peak D and now is plunging. But look at the weekly chart. That was a pathetic rally. So that's the grains. Look at soybeans. This is a continuous contract. Still waiting for that leg D to the upside, higher highs and higher lows, but all within the big containment. I love to draw these. Look at this. A large arch formation, a large rectangle formation. This is the wide rectangle. I have webinars on that. If you become a subscriber to the opening call, you'll have all these different webinars that I've done. You can go through them slowly, one at a time. Look at this. Higher highs and higher lows going towards just under or right on the previous high. And so far at 1540, the high that was made in the continuous contract was in June, the week of June the 10th of 2022 at 1604 and a quarter. And here we are at 1540, not that far below, but it's really struggling. I suspect at some point we are going to make a leg D in the daily, weekly, and monthly. I've done about weekly, but the monthly chart of soybean. If you look at corn, as we say here in Boston, rectangle formation, did a beautiful left side, right side price time match after that peak D. And where is my rectangle? There's the rectangle. And I'm just going to draw this in here and say, all right, this is kind of the rectangle formation, stuck in a range with corn just not going anywhere, maybe even dipping down at 672, maybe even having to touch the 650s for support. And if you look at soybean, I always say soybean, but it's not, it's sugar. SB at SB. Oh, I haven't changed the notation. This is a continuous contract. So my notation is hand charted. Every single one of the thousands that you see hand charted, whether it's my 1 minute chart, or whether it is sugar, daily, weekly, monthly. Now I have to change that. So that becomes an A. That becomes the B. That is the B, except that when it got smoothed out, I didn't move the price with it. So I'll do that right now. So it's gone to a peak C over there. And now it's struggling to retest the D. But if you look at the weekly chart, that is an E, that is an F in the weekly chart. And the monthly chart is an F/C. So the sugar is still moving quite nicely to the upside. Okay, so within that context, well, I'm showing you different chart patterns. I also wanted to show you that there's this rotation going on so that the grains, DB Agricultural Fund, which we are long from the 13s, is trading right now at about 2021. That is going to be very important. Remember, I got questions just the other day about, where did it go? I don't know why I always forget that symbol. I can picture it in my mind. And it's a grain. No. Oh, I'll get it in a second. Of course it is, Vail. So there's Vail. See, I said I didn't think that this was the time to add to it. I'm just watching, give it a little bit. I'd rather be buying strength than weakness because this is the dreaded H pattern. Straight down, makes an arch. In this case, it looks like an inverted V. If it takes out the left side low, it could go low. It could even test the 1591 200-period exponential moving average as at 1697. So I just don't see a move right now to jump into that. If you're looking at, so a couple of questions came in yesterday and today. So can I relook at NVIDIA? Yes, NVIDIA. Nice move to the upside at 237. It's up 29, a big spike. And what I'd said is, I had a question from one of our listeners. I'm not sure if it was a subscriber or a listener. And the question was, NVIDIA, I've been buying NVIDIA for years. I still do. Do you think this is something that I should continue to buy and hold? And my answer was, yes, I think it's a story stock. It's always got something in the pipeline. And therefore, if you've done your homework and you really believe in it, then I believe that this is one. You don't have to get carried away. Just small increments. It's like the people who have been buying gold and silver for years and years. I think this is a player. I think NVIDIA. I just did NVIDIA. I didn't want that. It wasn't NVIDIA. It was. Myrna. Sorry, Myrna. That was NVIDIA had a big move up today, up 30 at 237. That's really helping the semiconductors. Myrna, sorry. Myrna is the opposite. I couldn't understand. I said, wait a minute, it wasn't acting all that well before. And I said, I'm short term, a little bit cautious on it, but longer term. Yeah, longer term, if you believe in the stock, then I would treat it as something that I don't want to get carried away, but it is a fantastic company. It had absolutely everything going for it. I mean, the wind behind its back, if you want to talk about it in a metaphorical way. Moderna, biotech, COVID, they've got tons of trials that are going on, different products, sharply down today, as opposed to Myrna, which is up sharply. This is down sharply, 11 points at 147. And most importantly, I don't think, and my answer to the question was, I wouldn't get carried away. If you've done your fundamental work on it, and it is a position that you want, I said yes. On the shorter term, I didn't quite like it. In the intermediate term, I said, I need to see how it closes out the month. I'm still going to wait for February to close the month. But in the longer term, I wouldn't have this as a huge part of my portfolio. I would, if you've done your homework and you think that Moderna has all the ingredients that you like to see in something in the biotech area, and I do believe they have a lot. I just don't know how many are in the process of, let me see, how can I put it? In the process of the FDA approvals, how they rotate and how they go through. So I just be a little bit careful about that. But in the longer term, if you want to keep building a small portfolio, add little bits, yes. But I'm kind of nervous in something that did so well during 2020 and 2021, and then it's taken back so much. But as a very long-term position, I think, yeah, it has something.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So that was Myrna. That's Moderna Biotech. I wanted to go back to PANW here. PANW, I had a huge spike to the upsides at 188.72. Finally, you start to see the cybersecurity area working. Oh, it took forever and ever and ever. You're looking at, I need to go to, where was it? Alta in the den. Yesterday I was talking about Alta. I said, I'm just watching it just to see if it's a clue. Been absolutely one of the strongest stocks anywhere on any of the markets. Let me just go, there it is. So we're looking at a new high today, new all-time high at 535, up 4.29. Made a peak D, and for 2 days it didn't make a new high. It doesn't like to mess around for long. It likes to go to a new high, and there it is. And I said, I think this for me is going to be a bit of a clue because if it starts to pull back here, this finally we could say there's a more general market pullback. I don't see why it would pull back unless the general market was going to turn down. Oh, waiting for server data. Okay. Well, didn't see that. Gave me a fright. I thought it was back to my troubles that I had the other day. All right, so this is, I'm calling it E for now, an E in the weekly chart, E in the monthly chart. Unbelievable. Remember I said I haven't seen monthly charts of a stock. I can't remember who was it. Someone asked me about a daily chart, and I said, oh my, this looks exactly like Alta in a monthly chart, except that this is a daily chart. Look at this monthly chart. Look how many. 1 week and it goes, second week it goes to a new high, pulls back, and 1 week and it goes to a new high. 3 weeks, 3 months, I'm saying, 3 months and it goes to a new high. It just refuses to stay down. This is incredibly strong, and it's very impressive, I must say. So I said I'm only going to use them. There was no chance I wouldn't consider one of the very best of the stocks on any of the indexes to go short, not at this particular point, but it is fascinating that it refuses to buckle. It will not come down. And I think in a sense, it's just telling me that there are areas in the market that in fact are showing some resiliency. That's really what I want you to do. If in fact it started to turn down sharply, I'd say, just be really, really careful. All right, within that context, so I want you to just check out here. Now, I need to go through this because I'd spoken about it yesterday. I said, no position. I'm just looking at it. What would I want for natural gas to show that it is very strong after being decimated? I mean, having gone from the sevens just end of December down to the twos. Well, I needed to see a move that is sudden, sharp, and obliterates all the stuff on the left. And so far, this is not bad, up 10 cents at 2.406, because it was weaker this morning, and it's above yesterday's high. And this is the first time I can actually, for a little while, see a green candle that, with the MACD strong, and that's where I said I'm impressed with the way the MACD has been strong, the price, good divergence, and the stochastic's actually been working its way higher so that you finally got your A. There's your gray A. Right there. That's the start of a move to the upside. And the reason why I say it's gray is that the stochastic's still at 16%. That's pathetic. On balance, volume's turning up. The little blue line over there, gray line, and that relative strength is starting to improve. MACD's improving. So, yes, there are signs right now to say, finally, I'm getting a little bit of consistency with the technicals improving against a weak price backdrop. That is a divergence that I usually monitor very closely. So let's look at the UNG, because a lot of people have been asking me for quite a while, actually. So UNG is only up 30 cents at 7.88, right there. It had a high today of 8.06. It's not able yet to hold the gain. But what I'd said is, I want to see, and I'll have to use the UNG because a lot of people don't have the futures. I'll just use UNG, which is the United States Natural Gas Fund. I want to see a very powerful, again, today's still the day. It's still, the day's young. It can still happen. I need to see a push above 806. I really need to see 834 is the black 14-period exponential moving average. By Friday, it just has to scream to the upside. And by early next week, for this to be the kind of oil, you remember what happened with oil back a few years ago, went negative? You've got to see this flip so quickly and so sharply, and it has to start trading. I would have to say it's going to happen in the next day or two. It really, next day, a market day or two that goes into next week, it would have to, it has to close above 8.90, which is the high in the continuous contract of the 14th of February. If it does that, and it takes out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20 sessions on the left side by having one close above, right there, yep, 20 sessions, a one close above 8.90, you'll get a sneeze from me. What'll happen is there will be short covering, and there could be a really quick move towards from 789 where we are on the UNG right now. Oh, I'd say into the 895, 9.35 area. And then maybe that's it. And then it comes back down again. But that would be what I would look at to see, is that a trough D? Yeah, that's a trough D. We're in leg E to the downside. We've done the price time match from 11.69 a week. This is the week of 27th of December 2021, all the way to the 34s, come all the way back down. All right, so with that said, a couple of things are going on right now. I was going to do this tomorrow, but I'm just show you some of the things that I'm looking at right now. You see this rectangle formation right here in the 1 minute chart? So it just got stuck in this narrow rectangle formation. And the rule of thumb is that if within the rectangle formation, there is a sudden push to the upside, usually it's in a leg D, E, or even an F, and then it comes down, the chances are that it will go to the base, take out the base, and then pop back up. If it pops back up and then within 3 bars goes even lower, that's really negative. But if it goes over the rectangle resistance line, and I'm talking, so I'm trying to do this at the same time. If it goes over the rectangle, this is the pattern, you don't even have to know what I'm looking at, and goes back up and goes above the rectangle, if it's able to take out any of the left side highs, in this case I'm talking about the 1 minute E-mini chart, S&P, so if it's able to close above 4,025.25 in the next, I've got only a number of bars to do. I've got another 3 or 4 bars. If it's able to do that, in this particular case, if it's able to get to 4,027, I would have to say that a tremendous amount, we've had a couple of sessions in the market this morning already. We've had about 3. This would start the 4th session. It doesn't mean hours. It means just cycles within the market. So I'm looking at this. It hasn't happened yet. But that would say, here's the session that says, are you able, this is the market, are you able to get back to the high of the day, which is 4,034.25, right there, the triple top right there, 10-minute chart. And if you're able to do that, it would be a really big surprise to the general market if the market closes significantly higher of the day than the low. That's a big ask. But I'm just saying I had questions about it, just explaining what I'm looking at. I'll be back in a moment. Basil Chapman Dow is up 135, S&P's up 25, a bit of a rebound. We'll be back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So using this inverted V-shaped pattern as a benchmark here, W, which is Wayfair Inc., furniture, lighting, cookware, online, etc., down 9.93, down almost 20% to 39.91. It's about to test the low that was made on the 19th of January of 38.44. The low today so far is 39.30. The technicals are very weak, and this is just telling us a lot about the economy, because Wayfair had a spectacular move from January around about 30, screams up to the 70s. Peak G comes down over the 200-period moving average. Wow, comes straight down. So this is telling us a lot about the economy. It's a lot about, look, if you go to HGX, which is the Philadelphia Housing Index, I believe that is a peak G right there at the top in the 480s, trading right now at 437. It still looks like it has a little bit of a way to go to the downside. 429, it's at 437. 429 is the 14-period exponential moving average in the weekly chart. MACD still good. Stochastics actually just turned negative. It's at 76% in the weekly chart. And the monthly chart is seeing the histogram actually improving. So the Philadelphia Housing Sector Index has actually done a little bit better than you would ever expect. I wonder if I can I'm going to get rid of this here. I think I'd like to do that today. So let's just take this out, close workspace. There it is. Yes to all. And now I'm going to go to right here. Recent. Oh, I hope I have it. Yep, I do. Right there. Now, on the left, you'll see, with a black background, you'll see my triple yield chart. It's got the white is the TYX, 30-year T bond yield. The brown is the 10-year TNX, T note yield, and the 5-year is the cyan. Look, the cyan again is above. There's an inversion going on here. FVX. And you can see, I talked about this. I said cup and handle formation, not my favorite because it pops up and it can sometimes make an equal move from the base of the cup to the arch of the high, which is exactly what it did at 44.83. Then it came back, and now it's going to be testing the 200-period moving average. And all of a sudden, in the last couple of weeks, there's a weekly chart, it's been rallying. And that's really important because if you look what happened with the yields, look, this is Wood, the iShares Global and Timber ETF. Look, it went to a peak E, and now it's back at the 200-period moving average. It was trading above it for quite a while. It was very impressive. Now it's testing it. You're looking at the Philadelphia Housing Index right here, made a peak E in the weekly chart. Now it's testing key support. What is that? I think it's a 50% level right there. So Wayfair at this particular point is saying, don't get too sanguine. Don't, and that's the reason why we've got a big cash position. We are using some of the long side more as trades, but there are some parts of it based on like the infrastructure area where I think there is money coming in, and that infrastructure area should hold for a little bit. So this is very select. I would not for anybody, I've got a note here saying, you're the last one left to jump on board of NVIDIA hype machine. I have no idea why he ever talks it like that. For number one, I've never recommended NVIDIA. I only watch NVIDIA. It's a really important stock. If you and if NVIDIA skyrockets and moves up, are you going to not take the profit? Is that the way you like to trade the market? Because it has no earnings, etc. No, you treat the market. If you're a technical analyst, you look at it and you say price movement. I'm going to use that price movement to my advantage. So that I have nothing to do with NVIDIA. I've never seen an earnings report more engineered in my life than this one. The real truth is their revenues actually dropped 40%. Jim Cramer belongs in jail, not Yale. Hey, I like that. Very good phrase, but I don't think it means anything. This will one day be studied in business schools when all is said and done. I'm jumping on Intel right now. Their dividend cut is the best news I've heard in some time. Oh, okay. So let's just do that. Let's go to Intel. Okay. That was a rather long-winded way of saying I'm buying Intel. Intel is trading up 7 cents at 25.54. This H, lowercase h, let me just show you this in the Chapman methodology since we're talking apples to apples. Yeah. So I have a technique that says follow straight lines, arches, and cups. And here it is. So within that context, I like to look at straight lines, cup formations, or arch formations, or a mix of 1 and 2 and 1 and 3. This is red because if it comes down sharply and then goes to just a peak A or a B and then takes out the left side low, the dreaded H pattern says you can go down a lot lower. Woohoo, look at that. Intel makes the high in the 31s back in February, pulls down, grabs 4 bars to move up to the 28s, fails at a peak A minus because it takes out the left side low and has made a lower low. Now you've got this huge arch formation where the low is 25.35 on the 22nd of December, and yesterday's low was 25.30. So it took it out by 5 cents. This is the arch formation. We're going to be looking at it as a potential dreaded H. If it takes that out within 3 bars, it doesn't close above 25.35. That'll be negative. But in the lowercase h pattern, if I can just put that in here, look at this. In the lowercase h pattern, if the left side holds, even if it just nicks it by a fraction, there's a chance that you can have a bounce, and that bounce could get you an lowercase h that looks like a lowercase m. After that, if you take out the left side low, you've got to be really careful. So that's where we are in Intel. Why? Because the monthly chart has only gone to a peak A, then a pull back. Then it went to a peak A and a B, and it's pulled back. I think it double top, double bottomed, and double top. The top is 31.34 the week of the 18th of November, and 31.17 the week of the 3rd of February. So it hasn't, 31.17 hasn't taken it out yet. So this is what I like to do. I like to draw it in. I like to say, well, be a little careful because this is retesting a low and it hasn't broken above the left side arch to say, hey, I'm making a successful U-shaped recovery. Instead of saying, I'm about to try to test the left side low. If I take that out, that's a real problem. So the lowercase h goes to a lowercase m. I'd be very careful. So that's Intel. And if you're looking at NVIDIA, what a different chart pattern. Intel is saying, lifeline, lifeline, get the lifeboats. And NVIDIA is saying, not bad. I've been doing something right. And that's all I can say. Yeah, it's a tale of two cities. I could make a little pun on that, but I don't. So within that context, now we're looking at the down 4 at 4. Yes, this is going to be very interesting. Why? Because it was up 100. It was up at 32,272. Now it's at 32,046 down to. I'll be right back. Basil Chapman.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Yes, so Jim wanted to know, could I look at the TK shipping and the other shippers again? Have they held the gains? Well, TK just went to a leg D. Remember we were looking at this yesterday and I said there's a chance that it's going to go to a leg D. I'm calling that a G/C off the Chapman instant restart. It's trading up 11 cents at 543, up 2%. And it's a leg E in the weekly chart and only a leg C in the monthly. This is really interesting because within the context of the shippers and TK shipping, I think this is dry bulk, if I'm correct. I don't remember specifically. It's very important that the shippers are able to get everything through. And within that context, that's DSX was the other one, DSX. Look at that move. Leg E to the upside at 4.68, up 14 cents. Nice move. Yeah, so these shippers are telling us that they're still in demand. Let's go to E. Let's go to NAT, which is Nordic. NAT, there it is. Nordic American tanker, up nicely today, but it isn't making a new recovery high. But it is up 12 cents at 3.75, up 3.4%. So, yeah, there are certain areas that are working very nicely. Another question I had was, in the screamers that you've been looking at. What do you see? Well, law came up as something yesterday. CS Disco, was it yesterday or the day before? CS Disco Inc. I don't know what they did. Disco? I think it was disco. We don't do discos anymore. Look at this beautiful cup formation I drawn in, peak D. I thought there's a chance that it could retest that. Oh, we're done for the day. We're done for the day, and here it is. This is data. This is data-heavy litigation dispute. Very nice. Yeah, screens are still working. I'll be back tomorrow. Have a wonderful day. Check out Vote Before. Stay tuned for Steve Rhodes, and have a